Hi guys, welcome back to another important FRVP video. In this video, I'm going to tell you how I use the FRVP tool to confirm market reversals before they happen. Now, the keyword I'm using here is I am confirming the market reversal. That means I have already expected a market reversal. So to confirm my analysis, I'm using FRVP. This trick, I'll explain it to you as I studied it, as I researched when I was doing my research. I'll explain it to you step by step how I found this trick. Now, before we start, let me just show you this pattern. I think all of you have seen this pattern. This is very a common pattern in the markets. This is nothing but a higher high, lower high, and a higher high, then the market reversals, right? This pattern happens almost 90% of the time before a market reversal happens. Now, what is the psychology behind this market reversal pattern? I'll discuss that. How do we use the FRVP in this case? I will explain that also. Now, keep in mind, we have been studying the Elliott wave theory, the wave theory for finding your market structures. So, like I told you, this trick is a little bit advanced because first method we're going to do is we're going to find the pattern, and then on top of that, we're going to use the FRVP to confirm the pattern. All right, this is how we are going to proceed. This is a two-layer step. This is a two-step process. That's why it is a little bit advanced. Not everyone can do this. Only, let's say 10% of the smart retailers can do this method. So if you look at this pattern right now in Nifty's chart, this is Nifty 1 hour chart. Let me just show you the small pattern here, right? This is what we are looking for. If you look at this swing low currently here in the market, we had a rally here, very good rally, pull back, another rally. This is similar to our pattern and market falls back down to here. This is in our wave theory, your impulse pattern. Now I'm going to tell you for impulse pattern as well as your corrective pattern, we're going to discuss the trick to find market reversals. I'll explain the psychology behind it also. Let me just mark it so that it's clear for you. Right now, I think this pattern is quite clear. You can see there's a correction here. Now, what I'm going to do is I'm going to apply the FRVP tool. FRVP tool is here on the left-hand side. If you can see here, this point here, you can select the FRVP tool from forecast and projections, forecast and measurements, FRVP selected and apply it here. Now, those who have not yet watched the first video of FRVP, you have to watch it because in that video, I have told you all the settings of my FRVP tool because this is custom settings. It is not there in the public domain. Watch that settings first video, then you'll understand how to apply it. Here, what do you see? I've applied this FRVP. Where have I applied it? From the swing low to the swing high candle here. Done. FRVP is visible now. What is this FRVP telling me? It is telling me that there is the major transactions have been taken place in this area. What does this mean? This is the POC. This simply means the big players are not interested in participating in this long. So when I was researching, when I was looking for confirmations of reversals, first we identify possible expected reversal. Then when I started using the FRVP, I saw this happening so many times that the POC, that the area of interest, the most traded area, the most valuable area, it is not moving from here. Price is moving, price is going higher and higher, but this is not happening. So this tells me what? The smart money players are not interested in this move. They are not interested in this move. This is a dummy move in the market. This is nothing but your liquidity sweep. Stop loss hunts, liquidity sweeps, SMC traders, I think you can slowly relate now. What happens here actually is that I'll show you step by step. What we'll do is we'll remove the FRVP here. We will go one by one. This entire move here, actually it started from this point here. There was a pre-market gap down here. Market did this kind of a pattern, an impulse pattern. This is an impulse pattern in our wave theory. I'll go step by step. I'll show you what exactly happens in the move. So we'll take the first part here. In the first part, you can see from this swing to this swing. Here, where is the most valuable transactions? Most transactions of the big money, it's over here. Smart money have placed their biggest bets in this part. This is also the area where most of the retailers got trapped. Get it? Now, the next move which came after this was a fast, blinding gap up and big rally in the market. What does this mean again? What does this mean? There's a big rally in the market, but the major transactions have been taken place here. This is the wave 3 pattern. This is a wave 3 pattern where most retailers are absent. Most retailers miss this move. So what happens when retailers miss this move? There's less liquidity and it is very easy for the smart money to push the market in one direction. They have already trapped the retailers down here. Major transactions they have done here. The rest is free movement for the smart money. That is what it reflects in this FRVP. Now, what I'm going to do is we are going to include from here. We are moving all the way down till here. This is the swing low, right? So we are going to put the FRVP for this entire move now. The up move and the first down move. Let's adjust this. Right. What has happened? First important thing. Let me remove it and I'll show it to you again. You see the first thing that has happened is there is the FRVP, which is over here right now. The FRVP is over here at the bottom. What happens when I shift it to this point here? The FRVP has shifted. The POC shift happens. Point of control has shifted now to the upper range. Here, you can see this is the POC. Now, what is the psychology behind it? This means that smart money has sold their longs here. They have sold their longs. Okay, let me just tell you the simple ideology which 90% retailers don't understand. When they place heavy bets in the market, it is not necessary for market to go immediately in that direction. This you will understand later when you start practicing this a lot. They have placed most of their positions in this area now. What does this mean? Again, this is nothing but POC means point of control, most valuable area, most valuable transactions have taken place here. What exactly happens here? The retail is looking for long opportunities because they have missed this rally. What is the smart money doing? They are dumping their positions here. What is the price doing? Now, this is the third part. What is the price doing? Let's say smart money and retail are doing something. What is the price doing? Price is not doing anything but consolidating in a small area. This is price correction. This is distribution happening. So because this happens, smart money, when they shift their character, they are no longer interested in this rally. This is actually the meaning, real meaning of change in character of the move. The POC shifts, their interest has moved away from the rally. POC has shifted, market has given us a new area of most transactions, most valuable area. Now, after this is the trick. This is the small trick which I discovered. After this, what happens is that this rally comes. We see the final leg in the market. Now, we don't know in the live market whether this is a final leg in the market or not. So this trick will help us to identify it. What I wanted to do is start looking at the POC level. Start looking at the POC level. What I'm going to do is first, I am going to shift the POC one by one to one each green candle. But I want you to keep an eye on the POC. POC has not shifted. Good. Now I'll move it to another candle. Next candle. Again, POC has not shifted. Next candle. Again, POC has not shifted. The final green candle. Again, the POC has not shifted. It is still here. So what does this mean? Is the smart money interested in this move? No, they are not interested. This is a dummy move in the market, or this is the terminal leg, terminal wave. In your wave 3, your terminal legs are wave 5, wave C. Basically, this tells us, yes, this leg is going to be reversed no matter what. It is going to come back minimum to this level. Understood? This is the small trick which I discovered when I was studying the FRVP, when I was doing my research. It tells me that this is a dummy move in the market. I don't want to participate in this because the smart money themselves are not participating. Now, the question here is, even in this move here, if you see in this rally, even in this rally to this point, the smart money has placed their bets here and here in this rally. There is no POC, right? There's no POC. POC is at the bottom. So how do I know that this is the terminal leg or not? You don't know this using this, because first you have to identify which wave is going on in the market. You have to identify. When you see this correction, this is the point when you apply your FRVP. You don't apply it here. When you see this correction and then this point. So what are we looking for? We are looking for this kind of a market movement. This is the pattern we're looking for, right? So at this point, there is no pattern made. At this point, there's no pattern made. Over here, when the market does this and it starts to rally, this is the point when you have to apply it, right? The FRVP, to check for reversals or check whether this is the final leg in the market, right? So this is one of the methods which I found out when I was doing my research. It was, in the beginning, it was for me a little bit shocking to see how simple it was to understand. Most of our retailers, we spend a lot of our years to find market movements, exact reversals. Instead of finding exact reversals, try to find out areas of price where we should not we should avoid trading. That's even more powerful. Now, I've told you that this is an impulse move in the market, right? I've told you that this is an impulse move in the market. Same thing, let's apply it for an ABC pattern. How does it differ for an ABC pattern? Those who are studying, again, the wave analysis, the Elliott Wave Master Course, this is for you, especially those who are studying the advanced concepts in private. This is for you also. Watch this. The next part of the wave, you see here, there is a three-wave pattern over here. There are two kinds of three-wave patterns. This is one of them. This is a regular ABC. And same thing, before this rally, you can see that there is an ABC pattern here, right? This is the bottom. This is one. Here, you can see that this is one of the ABC patterns. As simple as that. It's not complicated here. Let me just mark everything for you. All right. So here, what do you see? This is one of the patterns. And then fall. In this case, like this, right? How do I apply the FRVP to find out what is the best method, or how do I find out there's going to be a market reversal? Now, in ABC patterns, something different happens. Something different happens here. First thing is that what you see in the FRVP is totally different from the impulse. First impulse, you clear, know what to do. Let me apply the FRVP in the correction patterns and I'll show you what do I mean. All right. So in the correction patterns, first pattern on the top, you see the POC is in the upper level, correct? Here, the POC is not in the upper level. Here, it is somewhere in the middle. This might be not so clear to you, but again, this pattern here shows me that there's major red color selling here. Now, what is this purple color, maroon color? Again, I urge you to watch this first trap video where we understood how to find traps in the market using FRVP. There I've explained all my settings. Watch it there, you'll understand it. So in this three-wave pattern, what do you see? That the POC has not shifted from this point. From the top, the POC has not shifted. It is entirely there. It has not yet shifted at all. Simple, when the market was trading around this level here, I have told my private group members, 25,000 level has to be retested. This was, I think, on 22nd of May. 25,000 level has to be retested simply because one of the most important point, this entire move was a dummy move. The real entry of the shorts or distribution has taken place over here. This entire three-wave pattern, at least this leg, last leg is definitely a false move and market is going to reverse back. Where is the point of control in this case? It is over here. So market has to come back to the level 25,000 once to retest it. This is one of the patterns. So to conclude here, in your three-way pattern, your POC does not shift from the first leg first leg itself, it does not shift. In this case, what happens then? In this case, what happens? There is a first leg. Let me show you. This is a first leg, a second leg, and the third leg. Now, before this third leg, there is a shift in POC somewhere here. Somewhere here in the third leg. Before the third leg, this down move starts. Before the bearish move, there is a POC shift here, and price stays there. The price does not stay there. The POC stays there. So what we'll do is, in this case, we will zoom in and we will see step by step where the POC has stopped. So first down move here, POC is over in this point. Okay, POC is here. The second part, let's see the second wave, pullback. POC is now here. All right, POC with the value area is here. Now let's go one by one. All right, now the POC has shifted at this time over here. Now after this, the POC does not move at all. POC is still there. POC is still here. So what does this mean? From here, whatever wave came, this is a dummy move. The real smart money, they have sold here. They are not interested in selling further. They're not interested in selling further. The important point here is not the FRVP. It is not what smart money is doing. It is to first identify that this is a 3-leg pattern. Like I told you, the first step is to identify the market structure. Then we apply your FRVP to confirm any reversal or not. This is the most important point. Find the market structure. So to conclude, what I'm trying to tell you here is that in your wave 3 patterns, this is actually an advanced method because it requires you to study the market structure first. Then we apply the FRVP. To conclude, what I want to tell you here is that first method in the impulse pattern, there is a POC shift towards the wave 4 area. Then the last leg, the final leg, the wave 5, the terminal leg. This is a very important part where you can find out when this is where we apply the FRVP to find whether the POC has shifted or not. If it is not shifted, for us, it's very clear that market is going to reverse and come back to the value area, at least minimum. Now, in terms of your 3-wave patterns, the 3-wave patterns, you can see the POC will stay in the first leg itself or in the wave B, in any wave B or X wave, whatever, the 3-wave patterns, the minor pullback which comes, right? The corrective wave inside the corrective wave, the minor pullback which comes, that is where your POC stays. And the next leg, the final leg, the POC does not shift. It tells us finally, yes, market is going to reverse. This is the last leg in the market. Now, we have discussed this for a very small time frame. I'm going to show you this same concept on a higher time frame using a 1-day chart. We're using a daily time frame chart, especially in Nifty. You can use it again on any instrument, any time frame. This is a fractal method. Just like waves, this is a fractal method, meaning on every time frame it can be applied. Simple. This rally is the last rally from August 5th, 2024 to the September. I think those who are following me back then, I think I told you in a tweet that I posted in a tweet in public that I'm sorry, I only thing I see here are traps. What did I exactly see? I'll show you. I have applied what? The FRVP from this swing low to this point here. So what is there here? Basically, this is a diagonal pattern. This is a 5-wave pattern. So what do we want to find? We want to find this kind of a structure here, reversal kind of structure. What do I see here? I'll show it to you right now. I'll just put the FRVP. What do you see here? What do you see in this entire move? That the FRVP is over here. The main POC range is over here in this point. There's a fast rally in the market, but there is no smart money activity, meaning the main players, the big players, they have definitely pushed price here, but they are not interested. Really, real buying has not happened because the entire major activity has happened over here. So what does this tell me? That this is confirmed a fourth wave, some kind of fourth wave. This is the expanding diagonal pattern. So fourth in that. And this is your final move. This is a pump. And what did I tell you happens after that? Market has to come back and retest this point once again. It can go further. That's optional. But first thing it has to do, it has to come back and retest the value area. It has to be a big reversal. Imagine if you knew this in advance back then in 2024 when the stop was happening, when I tweeted this out, when you understood this concept, you would have avoided taking investments here. I know so many people who got trapped here. They have come to me later, sir, how do I get out of this loss? First thing they did was not study. They have subscribed to some tips provider and they have followed them. Everyone is in the Titanic mode now. Anyway, point here is that this is applicable on a higher time frame also. Now we're going to a higher, even higher time frame. We are looking at this chart of Nifty in a weekly time frame. What I'm going to tell you might be surprising to many of you, but this is something which I knew already long before this reversal happened. And in my yearly, your entire year view, I gave you a simple idea that market, which I released, I think, during the New Year's of 2025, market has to come back to some point here. The reason was very simple. If I take this swing low from here all the way to here, what did I see here? There is possible some kind of a fourth leg pattern, right? From this rally here, there is some kind of a consolidation which came in the form of sharp movement during the pre-election polls and the election results. But anyway, it does not matter. The point here is when I put the FRVP, you see that the point of control is still stuck here. This entire range, the point of control is stuck in this area. What does this mean? It means that the smart money, no matter how many points it goes higher on a higher time frame, they're not really interested. So regardless of what smart money thinks or does on a higher time frame, what does it tell us? It tells us that market is going to reverse. Until where did it come? This is the final leg of the reversal. When till where did it fall back? You see exactly to this zone, exactly to the value area, and then we got a bounce again, right? Very simple, nothing complicated here. Let's look at this part now. What do you see? What do you see in this fall now? This fall, if I just take it out, take the FRVP out, you see this is some kind of a three-wave pattern. And before the final fall, before this final fall, what do you exactly see here? The same reversal pattern, but bearish side. Whereas this is a bearish move in the market, and then we see a reversal, right? This is the exact same pattern inverted. So how does it look? It looks like this. Simple. This is the final up move. So when I apply the FRVP here in this point, final leg, what do I see? Second, the move from here, this final leg is a dummy move in the market. This final leg is a dummy move in the market. The market is not interested. Smart money is not interested to take part in this leg. They are looking for a bounce in the market. Once you knew this was going to happen, I think I shared a cryptic message on Twitter at that time regarding this date of 7th of April. Those who are following me back then, I think this date 7th of April, I explained it using a GAN astro concept in a different video. You can watch it later. But this date was already known to us long before it happened. Anyway, point here is that if you look at, again, this is the same chart of daily time frame, same move. You can see that from this point onwards, this entire move was a dummy move. The smart money was not interested to participate in this down move. But again, this was what? Something, a news related event, right? If you remember, this gap down was a news related event on April 7th. There was some, tariff related news here. Global markets reacted. But what is the actual chart telling you? It tells you that this is a dummy move in the market. And when you know this is a dummy move in the market, this pattern is also playing out perfectly from here. The reversal pattern. Very, very simple, very, very powerful. Some people think this is a W pattern. This is not just a W pattern. This is something more powerful than that. All right. Thank you guys. This is just a small video. I wanted to show you small trick. I wanted to show you where I found when I'm doing my own research. I'm making this research publicly available to you. And this is not the only video. In the first part, we discussed about traps. Second part, we discussed about the three critical levels where you can find out market reversals. The third part, we discussed about how to find operator activity. Now, this is the fourth part. We're talking about confirmation of market reversals. First part is very important because that is where I have shared my settings of the FRVP. Thank you guys. I'll see you in the next video with more analysis, more research, whatever I have, I'll share with you. This is the end of FRVP series. I hope you have enjoyed it. Those who are following regularly, those who have not yet watch all of them. I'll see you in the next video. Till then, take care and be safe.